Hello there. This is James, and you're watching OneRoyal, and it's live. In fact, you're not just watching OneRoyal live. In fact, you're watching OneRoyal presents a watch-along of a major economic event I have missed over the last couple of months, and that, of course, is job data. That's right. After such a long time, we are finally going to get some job data after a very long time, the longest US government shutdown in history. But before we get into all of that, I've got a few questions here. Right? I'm starting to see the market fluctuations. Me too. Hey there to you too. Hey, James, can't wait to see what happens to the markets. Me neither. But before we get into all of that, of course, we need to also say, don't forget, that these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So like I was saying, after the longest US government shutdown in history, with the markets practically trading blind, we are finally getting US initial claims, US average earnings, US unemployment, and of course, US non-farm payroll. Non-farm payroll. We're finally getting it. However, I will state that this is the non-farm payroll in from September. We've got a couple more questions here as well. Hello, welcome back. Oh, thank you. I've missed doing these shows too. I really have. Let's go for it. Yes, I like this. Hi. Hi to you too, and let's do this. Very good. Nice to see everybody. Love to see everybody come up. And don't forget, guys, this is a live show, so please come in, ask your questions, say hi, and share me your opinions, obviously, as well. This is all really, really good. So like I say, we're finally getting the US non-farm payroll, and this is going to be a really interesting thing, because we're going to start hearing a new buzzword in the market. We are. And one of the buzzwords is, and one of the things the market's very interested in this number. Bear in mind, we're getting in September. Okay? We're not getting October's. In fact, we might never ever have October's number. We're getting September's number. Okay? Are we going to see a case of no hire, but no fire? What do I mean by that? I mean by the fact that, are we seeing signs? Some people can blame it on AI, some can blame it on current economic conditions, but are we going to see a case that the companies are not hiring to save costs, so there's not a case of firing? But anyway, before we get into more detail and more discussions, okay, I've got another question here. Hello there, my friend. Hope you're good. Buy or sell? Buy or sell what? That would be interesting. And of course, don't forget, like I said, these videos are for educational purposes. But nice to meet you, and thank you for coming along. What's this question? This should be dropping down after the shutdown, typical finance and politics. Okay, this should be dropping down after the shutdown. Typical finance. Yeah, like I say, the shutdown has done a lot of damage, and we are going to start to see the damage made by the shutdown, no doubt, in the coming weeks. But anyway, for those who are new to trading, maybe asking why I'm making a big fuss or getting all excited about the NFP. Why am I jumping off or bouncing off the walls about the non-farm payroll? Why is it important? Well, released by the Bureau of Labor Statistics, which is a government organization, hence the reason why we've had no data for so long because of the shutdown. The non-farm payroll, or NFP, in short, presents the number of new jobs created the previous month. Like we said, we're looking at September, not including farm workers. Hence the name non-farm. Brilliant imaginative title, no doubt. Now, potentially, a higher reading of the NFP potentially could be seen as bullish for the US dollar. A lower reading is potentially bearish for the US dollar. Now, certainly if you're a currency trader, Forex trader, this can cause a fair bit of volatility in the market. This is why currency traders in particular get very, very excited about this event. Now, what's the expectation? Now, remember, again, I'm underlining the fact this is for September. A little sip of my tea. NFP expectation is for 50,000 new jobs created back in September. The previous reading for August was 22,000. Now, the big question on everybody's mind is, are we going to start seeing a slowdown in the labor market? Is there a slowdown? Because if we have a look at some numbers, especially with this whole concern with tariffs, etc., AI as well, that's beginning to cause a bit of concern to the market as well. But if we have a look back, okay, March, we had 120,000 new jobs. April, 158,000 new jobs. May, 19,000 new jobs. June, negative 13,000 new jobs. July, 79,000 new jobs created. And August, 22,000. So are we seeing a steady decline in the job market? Which leads me back to the original new sort of buzzword going around, which is no hire, no fire. Or are we going to see an improvement? Are we going to see a bounce? Now, here's another question. Do we buy or sell gold? Again, I cannot give you that advice, but we will definitely, before the announcement happens, we will certainly have a look at it. Nice to see you, by the way. Nice to meet you. Hope you're good and hope you're well. But we would definitely bring up gold on our charts, which actually leaves me a quick question, going off on tangent slightly. I want to show of hands, or not show of hands. Come on the chat, because we've got, like I say, we've got 7 minutes before it happens. Come on to chat and let me know what instrument or what asset you would like me to watch during the announcement. Be it gold, be it euro, dollar, be it the cable, be it dollar, yen, Swiss franc. You tell me. I want to, have a vote on chat now and tell me what asset you want me. Of course, we'll look at all of them, but what asset you want me to look at as the event happens, which is happening now in 6 minutes' time. But we will look at gold, my friend. So yeah, it goes back to my original point: no hire, no fire. And this is what's interesting. Again, this is going back. It's going back to September. Remember, we're looking at September, not the latest job data, which is not really going to give us a completely clear image of what we're looking at. Okay, so I've got gold straight away. Gold, gold, gold. It's like people know me. They know I'm a gold bug. Carry on. People vote, please, before we go and watch the event. But here's another interesting factor I want to talk about. Okay, is that according to a private organization back in October, not government, because remember, we weren't getting any government data. October had the most layoffs almost announced layoffs since 2003. As companies are slashing roles to save money. So again, it then begs me a question of how accurate, because it's September's number, how accurate this is going to give us for the economy. So again, and here's the other thing, which is also puts doubts in my mind of how much the market is very excited about this, but how much this is going to really tell us what is going on in the economy, is the fact that October, most recent, we are never going to get. Potentially, we're never going to get that number due to the shutdown. We might never get it. So Yes, we're excited. We're finally getting job data, but it's 2 months old. Where are we now? That's the big major problem with this announcement. Funny dude. Oh, I like this. Listen to this. I got another gold. All right, so I guess we're looking at gold. Gold, the currency of the gods. Couldn't agree more. I couldn't agree more. I'm a massive gold bug, people, so I do love gold. But anyway, what does it all mean, though? Okay, it's all leading up to one thing and one thing only, of course. And will this be enough data, of course, to give the Fed enough information to decide what to do in December? You know, bear in mind, we're not, or most likely not, going to get October's job data. Will this be enough for them to decide whether or not they will cut rates in December? This is the big, big question mark. And this is why, again, the market's looking this with a bit of anticipation and excitement, and at the same time thinking this might not be enough for us to get a clear picture of what the Fed might do. But anyway, let's look at some of the other stuff we're going to be getting as well. Of course, like I say, it's jobs day. It's jobs day. It's not just the NFP. We're getting a lot of data today. You know, of course, we're getting average earnings month on month and year on year. Initial claims. We haven't had initial claims for ages. That's supposed to come in at 223,000. Unemployment, US unemployment, which is supposed to stay steady at 4.3. Just for those who are new to trading, just to give you a rundown, okay? Initial claims, which is week by week, okay? So weekly data. Again, we haven't had that for such a long time, so we don't know the previous weeks, but initial claims is the number of people signing on for unemployment benefit for the first time. Okay, so this is also quite important, but it's weekly, so it doesn't have all the drama of the NFP. But today we're getting it for a long time, so yes, there's a little bit of drama on that. Anyway, we're coming up to just under 2 minutes. Guys, don't forget, and ladies and gents, don't forget, get your vote in to what you want me to watch as the event unfolds. At the moment, gold is winning by a landslide, so make sure you get that in. Let's go through some quick potential scenarios. Potential scenario number 1. NFP is announced higher than expected. The US dollar gains strength as hopes fade of a December rate cut. Potential scenario number 2. NFP is announced lower than expected. The US dollar falls under pressure and the market rejoices with anticipation that the Fed will indeed cut rates in December. Potential scenario number 3. NFP comes in as expected. The market is lukewarm to the announcement. Potential scenario number 4. NFP is announced either way, so it doesn't really matter. It could be lower or higher, but the market ignores it as they're more concerned with the October number. So again, it's old data. It's 2 months old, so they don't really care about it. Potential scenario number 5, NFP is eclipsed by other job data, as in average earnings, unemployment, and initial claims. Anyway, time to get ready. So the votes are in. We're going to be looking at gold. So this is what we're going to be looking at, gold. And we are only 15 seconds away. Time for me to have a little swig of tea. Okay, here we go. Oh, okay, gold is spiked down a little teeny weeny bit. It's moving now. It's moving now. Let's see what the number is. What the number is. It's coming in now. We've got a lot. Right, breaking news. NFP is indeed announced higher than expected. Comes in at 119,000 new jobs in October. You know, expectation was 50,000. Okay, comes in better Other job data coming in. Average hourly earnings year on year was expected at 3.7, came in at 3.8. Okay, better as well. Unemployment. Unemployment, though, comes in worse than expected, comes in at 4.4%. 4.3% was the expectation. As well as that, what else we got here? Average earnings month on month comes in worse at 0.2% versus 0.3%. So again, I think the expectation overall, just remember, these are September's numbers, that we were going to get a higher number than previous. Okay. And as you can see, we're looking, if we look at it now, okay, gold is not really moved. Let's have a look at euro, see what the euro reacted. Euro boosted a little bit, but not dramatically. The cable, the same. So we are seeing, again, a little bit of potential scenario number one, where we see we're coming higher, we'll see a slightly weaker dollar. And we are seeing it slightly. See the dollar yen, see how the dollar yen reacted. Again, pretty tepid, okay? Dollar Swiss, again, negative. So we are seeing a weaker dollar because that is a good job number. It's higher than anticipated. But I also think if I'm looking at this other data, unemployment, average earnings month on month, we are beginning to see a little bit of cracks in it. Okay, and don't forget, like I say, this is not including October's numbers. This is not October's, this is September's. It's 2 months old. So where are we now? Where are we now? And the big question, I want to open it up to all of you. Is this enough? Is this enough for the Fed? For the Fed to make a decision about cutting interest rates? Is this enough? Okay, let's have a quick look at other things. Look at the dollar index as well. Okay, slightly down. So gold is like trying to decide, because gold is going to be a major beneficiary, obviously, if they do lower interest rates, because, you know, if they lower interest rates, people move their money out of savings into gold, because gold doesn't obviously have interest, you know, it doesn't charge interest. You don't have interest rates for gold. So it's a, you know, this is why gold is one of the reasons why gold has been flying high over the last couple of months in particular. But gold is undecided. Look, let's have a look at Bitcoin, see if we've got a bit of risk appetite. Not really. I think overall, though we've seen a bit of movement, I think the overall conclusion, I think, is as it stands at the moment. Don't forget, there's often a delayed reaction as well. Don't forget, we haven't got the US session doesn't open for another hour. So we're an hour away. I think the outcome was potential scenario number 4, is that the market is not overly fussed with it because it's old data. It's not the real picture of where we are now. Yes, you know, it's a good higher number, but I think we anticipated it. And yes, maybe this might be enough for the Fed to, you know, cut interest rates next month, but still, it's not enough to give us a bigger picture of where we are. Plus unemployment creeping up and average earnings falling month on month tells us the picture is not all that pretty. Not all that pretty at all. Don't forget, of course, it's a live show. I want to ask this open to the room. What does everybody else think? What's everybody else's opinions of this? What do they think? What does everybody else think? Gold. Yes, I know. We wanted to watch gold. Bit tepid though, wasn't it? Didn't really do a lot. Nice to meet you, by the way. Thank you for coming along. Nice to see you. What's everybody else's opinion? What does everybody else think? You know, what does everybody else, what's their view? Because it's the whole point of these sort of live watch-alongs, these live shows is, of course, is to, you know, we're a community. We're a community of traders and community of market enthusiasts. So we like, you know, sharing ideas, sharing opinions, and we're passionate about it. That's the whole point. So let me know your opinion. Let me know what you think. Or maybe even go off topic. Nothing wrong going off topic. Are we going to see, you know, when are we going to see the AI bubble burst? We all know it's a bubble. We all know it's a bubble. And of course, you can ask me questions as well. Feel free to ask me questions. So having a quick look, see if, you know, okay, the euro's moving a little bit and the cable's moving a little bit. Gold is undecided, which is what the asset we all wanted to talk about. It's all very undecided. I didn't think it was more, but it is September's figures. Be interesting to see what it is for October. Yeah, we'll all be fascinated to see what it is for October, but the chances of us getting October's number is not looking good. We are unlikely to find out what October's number is. So we will never know. We will never know. That's the big problem. That's the big problem. I mean, I think they're releasing some jobless data on the 9th of December, but the actual NFP itself for October, we're not going to get. Most likely, we'll never get it. We'll never know what it is. So that's the big problem for the Fed and for the market in general. Yeah. That is the big problem. Hello, where are you from? I'm originally, nice to meet you, by the way. I hope you're good. I'm originally from the UK. You American? No. Not there's nothing wrong being American. I'm British for my sins. I'm English, yes. British. I'm from the UK originally. It's a good question as well. Since October results are not yet out, the Fed will not have full confidence cut rates, I think. This is actually a really valid question. This is a really valid point. A really, really, really good valid point. I think this is a big problem. And I agree with you. Like I said before, the actual chance of us getting October's number is looking very, very unlikely. I don't think we're going to get it. And I think you're right. I think without that, or even more of a clearer sign on that, it's going to be really difficult for the Fed to make a decision. I totally agree with you. I think they will. And I think there's already signs. We've had speeches over the last couple of weeks, of course, from other Fed members basically saying that they're all right to hold rates where they are. They don't want to cut it because they don't know. And I think you're right. I think it's a really valid point, a very good point, awesome point, and I totally agree with you. Like I said, I think though we were excited today to finally get some job data, it's 2 months old. We really need to know what's going on now for what the Fed will make, or how the Fed will decide what to do in a couple of weeks' time. This is an interesting, good question, and very good point, by the way. Very good point. Should I only learn classical theory and supply and demand? To be totally open with you, I don't think there is one set rule that you should only learn one sector. I think, you should be open to learn several sectors, because, to understand yourself, I always say understanding yourself and your personality to match your trading style is important. But I always think if you want to know the bigger picture, it's best to take the whole group of things. Now, and again, it depends on who you are as an individual. I mean, for example, I've been in this industry now for 20 years, so I'm old school. I'm old school fundamentals. I'm old school, especially when it comes to commodities, supply and demand. So I'm old school. But I don't think you should only learn that. I think you should open your horizons to many things. You might find something in particular which fits your personality and your own trading style. For example, you may be more technical based. For example, you might find that more up your alley or up your street, so to speak. But there you go. That's a good question. Thank you. Is there any other questions? Anybody else want to share some valid points? Are you American? I love it. Do I sound American? Or is it because I'm loud and excitable? Probably that, isn't it? I'm not saying that all America. How much experience do you have? I have a fair bit. I've been doing this for nearly 20 years. I started off trading gold, for example, and just to show you how old I am, when I started with gold, gold was trading at $636 an ounce. $636 an ounce. That's how long ago. It was back in 2006. And obviously now it's at 4,000. So I've only ever known gold to obviously dip, but I've only ever known gold to go up in one direction. But I've got a fair bit of experience. But like I say, I never consider myself an expert. I consider myself somebody who wants to share their knowledge with an idea that it may help you with your trading journey. No, you're British, sir. I am indeed. I am indeed. Ha ha ha. All right, okay. Yeah, nice funny joke. What's your opinion when gold doesn't know what to do with this info? It's being very wary. Well, good question, but let's pull up gold again, because I know gold, everybody loves gold, myself included. Look, I think the one thing we can take away from this, initially, don't forget, the market's digesting this. Okay, sometimes it takes a little while for the market to digest it and then decide what to do with the information. Gold is very wary because it's benefited a lot in many ways to the hope that they are going to cut interest rates. And then again, of course, the argument's going to be, or the question is going to be, is this data, bear in mind it's 2 months old, enough to cut rates? Yes, we had a better number. Yes, we had a better number, but is it enough for the Fed to pull the trigger? This is why gold is trying to decide what to do, and it's not been a massive movement. As well as that, if I look on a daily as well, which is something I'm watching a little bit, I think the reason why gold is also a bit wary, I think that maybe we're looking at a beginning of wave C on a potential Elliott wave, potentially as well. I think potentially the intrinsic value is around here, maybe around here. But anyway, but that's why gold has been indecisive really on the back of this. Is, like we've said already in this show, is this data enough? Is this data enough for the Fed to make a decision? But good question, very good question. Yes, I registered OneRoyal, but it's the Seychelles branch, and that's a weak branch in Great Britain and other top-tier countries with stronger licenses. Well, don't forget, I'm actually based in Cyprus, so I don't actually work in the UK. I'm from Britain, obviously, initially, but I'm in the UK. And obviously, I will say, okay, part of my job is obviously I'm head of market research and market analysis. Okay, so as you see, I'm always on YouTube or our YouTube channel or Instagram doing obviously market updates and educational videos. Okay, but I also jointly manage a team of analysts. And I will say one thing. I run them like we would do if I was in the UK. And they're fully professional and etc. So I'm very proud of my team I jointly manage. We are a very professional team and we treat it like we would be if we were in the UK as well. So I will say that I'm proud of that. Good question, though. Good point. Okay, here's another valid point. I also think that since USD will not crash, but we'll have a slightly weaker crypto, will be up, but volatile. Agree. Now, this is a very valid question, a great question as well. I think obviously we've had a really tough year for the US dollar throughout. Okay. And we are seeing a little bit of a crypto crash, in particular Bitcoin. And we'll have a look at Bitcoin and bring it up, for example, has had a very, very tough time. Bear in mind, we hit the peaks a lot. I'll bring it up as well. I'll share that with you guys. We've had the peak a lot, but since then, 126. Since then, we've dropped under 100,000, and we're holding just above 90,000. I think a lot of people are expecting, obviously, for it to drop down to 80. Now, this hasn't helped. The reason why crypto has been under pressure over the last couple of weeks or so, is risk appetite has come off the table, so people are more risk averse. And we've seen that with the market as well. And as well as that, we've had major holders of crypto and Bitcoin in particular selling off their holdings. And we are seeing that. And I generally do think, actually, we are potentially, in my opinion, with this risk-off attitude continuing, we'll see a weaker Bitcoin and crypto market in general. And I'll tell you why. Okay, is because, let's face it, regulation has got easier for the crypto. We've got that already. Being adopted by banks has come in already. Okay, so I can't really see anything good or any more good news to come in, which hasn't already happened for it. You know what I mean? So I think it's lacking on that. There's nothing else coming. I can see coming, which will suddenly go, oh, this is now being cleared. It's now this. It's now that. We've already had that. So I can't see any good news. So I do think it'll carry under pressure. This will all change, of course. This would all change, of course, if we see a return of risk appetite. For now, I think it remains under pressure. And I think there's a lot of analysts out there who potentially expect it to go to potentially around 80,000. What's this one? Hello, buddy. How are you? Is there a trader here? Yes. Hands up who are traders here. I think there's a few traders here, my friend. Hope you're good. Nice to see you. Okay, so you're from Egypt. Oh, nice to see you again. I'm from Egypt and the entity Seychelles or the Arab states. The entity Seychelles. I say, yeah, it's a potentially different license, many licenses, I think. Well, actually, many licenses OneRoyal has, actually. So, yeah. What's this? A clap or a thumbs up, I think. My eyesight's beginning to go. Here we go. Well, this is a nice love. What a lovely comment this is. This has made my day. Thank you. You're a great guy with goals. I have a wonderful time with you, and you're the best expert in Britain. I wouldn't say I'm the best expert. I wouldn't even call myself an expert, but thank you. I hope Britain will conquer America, especially that crazy Trump. I don't see that happening either, and I hope we don't. I think we've got our own problems first. But what a nice compliment. Thank you very much. And thank you for coming along and watching this show. I really appreciate it. You're a star. You're a legend. Is there anything else? Any other comments anybody else wants to say? Or, share their opinions, of course. Okie dokie. Okie dokie. Don't forget, okay, we'll be doing a new live show very soon. So I've been doing this for a long time. We'll be starting, a new series with a lot more interviews as well, which I'm really, really excited about. And of course, we will be doing these watch-alongs. Whenever there's some big data being announced, hopefully it'll be a little bit more exciting than today's. Because today's was a little bit disappointing. But don't forget, if you like this sort of content, of course, subscribe if you like. If you put up with me, top enthusiasm about the market, by all means, give me one of these and hit the notification button so next time going live. Like I said, we do these are regular things, especially now the US government shutdown is over. We'll be coming back, totally. Okay, here's a good, interesting question before I wrap up. This is another great question. What has caused a huge gold drop from $4,200 to $4,050 in a week? I'll tell you two reasons, in my opinion. Okay. One, and I think this has affected the whole market. One, I think there is doubts, and I don't think this NFP is going to help either. This number today, there is doubt that the Fed will cut interest rates. That's leading to the drop. I think that's a big reason. Okay. And as well as that, I think the intrinsic value is lower of the yellow metal. I think the rise, because I've been trading gold for over 20 years, and I've never seen this dramatic run or this bullish run go on for so long. So to me, it tells me a little bit of madness of herds. So I do tend to think that it's going to drop down a little bit more, potentially down to its natural value. Unless, of course, we get more hope that the Fed will cut interest rates. Okay. So this is what I think is causing it. I think that we've had potential Elliott wave theory on this as well. Potentially we're maybe looking at wave C now. This is why. But I think the fundamental reason is that, like I say, there is hope, or the diminished hope, or hope is falling that the Fed will cut rates in December. Thank you. You're welcome. Thank you. Thank you so much. I really, really, really appreciate it. I really do. Great questions, guys. Guys, the questions have been great today. I really appreciate it. I really love it. I love it when it's like this, you see? I love it when we're chatting and talking and sharing opinions. This is what the whole point of doing it, It's the whole point of doing it. Like I say, we will be doing a lot more of these. We've got a new show coming out really soon, which is going to be great. I'm really excited about that. And some of the guests I'm going to have on it are some major people as well. Major famous people as well, which is going to be brilliant. So we're going to have that. But anyway, if there is no questions, leaves me to say big thank out, excuse me, big thanks to everybody who's come along for the show today. Sorry, excitement was a bit muted, but never mind. Big thank you for everybody coming along to watch the show. Massive thank you. Everybody out there as well who asked questions, said hello. I can't go through all the names because there's so many of you, but I love that. It's the whole point of it. It's brilliant. Thank you so much for doing that. I really appreciate it. Coming along and asking questions. Great questions. Oh, I've got another question here as well. With Elliott Wave, you might remember I said from Lives. Okay, yeah. Very true. Excellent. Good question. Very good. Like I was saying, though, like I say, if you like this sort of thing, by all means, subscribe if you like. Hit the notification button so you know next time we're going live. Like we do try to go live a lot more regularly now that we've got more data to talk about as well, which is excellent. And of course, if you put up with me and like this type of thing, by all means, give me one of these. Leaves me to say one thing. Don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, the risks at hand before entering any trade. Till next time, every single one of you, trade safe.